Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Excuse me. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. And my name on Discord is Doug P. And also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of the channel, which I'll go over in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset like the S&P 500 futures or Apple or Nvidia shares or stock. And setups can be taken any number of ways. For example, with the S&P 500, setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments, so please feel free to post. All right, my agenda for today, what I want to cover, go over news items, economic data, events for the rest of the week. Then I'll go through my positional analysis. Then I'll review setups from this morning, and then we'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, so news items. I don't believe there were any key news items today. Maybe a Fed speaker. Tomorrow, Wednesday, there's services PMI that comes out at 9:45 a.m. and 10 a.m. Eastern Time. And then on Friday, the big event of the week is the employment report that is out at 8:30 a.m. Eastern Time. That's the employment report that comes out at the first Friday of every month. Excuse me. All right, let's get started with positional analysis. I'm going to start with the S&P 500. And before, this is the ES futures in Bookmap. And before I take a closer look at this chart, I'm going to take a look at a larger time frame. I'm going to go to SPX. This is a 30-day, 1-hour chart for SPX showing price and key levels. So first of all, here is the By the way, am I streaming on Discord? Looks like I may have lost that. Hold on just a second. Okay, so it looks like my stream on Discord, the video is up again. All right, Truman says today there was a jobs number that came in hot. Market reacted. Okay, I'll take a look at that. It was a busy morning, still trying to solve my computer problems. I think I may have something. Anyway, spent the morning doing that. All right, so here's the S&P 500 SPX index, 30-day 1-hour chart. This is the September 15th monthly expiration, big expiration, call dominated, and the downtrend, that's when the downtrend began, and price, after a brief up move last week, continues lower, down toward the put wall. I'll go over that in just a moment. All right, so let's take a look at some levels now. First of all, the dashed purple lines are showing the lower and upper weekly expected move, and SPX is just above that lower weekly expected move level. And then this is the lower and upper daily expected move shown by the dashed blue lines. SPX trading well below that level, the lower trading well below the lower daily expected move. All right, both those levels are based on the options market showing a 1 standard deviation move up or down 68% of the time. SPX, or whatever you're looking at, should trade within those levels. All right, there are also Spotgamma levels on this chart shown by the dark red lines. Let me point out the key daily levels. First of all, 4,200 is the put wall. That's the strike with the largest net negative gamma that can be expected to act as support. And above that is the 4,300 absolute gamma strike. That's a strike with the largest absolute negative and positive gamma. Above that is the volatility trigger at 4,350. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. Note that SPX is trading well below the 4,350 volatility trigger level. So definitely in a negative gamma environment. And then finally, there's the call wall at 4,450. That's the strike with the largest net positive gamma that can be expected to act as resistance. So those are the key daily levels. And note there were no shifts in levels for the SPX. Comparing today versus yesterday, there were no shifts in levels. Hold on just a moment. Okay, so those are the key daily levels. SPX trading below the lower daily expected move, and the volatility trigger, but still above the lower weekly expected move and the put wall. And let's just take a look at the levels in play for today with a 1-day, 1-minute chart. This is SPX, 1-day, 1 minute, showing that SPX again is trading above the lower weekly expected move, but below the lower daily expected move, and also again below the volatility trigger at 4,350. All right, let's take a look at Bookmap now. In Bookmap, I have my own cloud notes. Oops, a little bit too much. So I have my own cloud notes in Bookmap here. shown in this column. I have the labels in this column, and I use a price lines add-on available in the Bookmap marketplace that draws the lines and places the labels. So I have the SPX levels. There's the 4200 put wall and various support levels. And note there is a difference between the price of ES and SPX. It's about 35 points today. That's what I'm using. Let me just check on that. So yeah, it was right around 35. So ES minus SPX today is right around 35 points. I also have SPY levels on this chart. So here's the SPY 426 level that did act as more or less as resistance today, along with VWAP. And also there's a 4276 level. You can't see both labels, but SPX 4276 level that was noted as resistance today, I believe. Or no, it was, I think, noted as support but acted as resistance. And then here's the, also you can't see the label, but the white line is showing the SPY 425 put wall. So the S&P 500 trading below the SPY put wall, but above the SPX put wall. All right, so those are the levels in play for today. Again, no shifts in levels for SPX. For SPY, there were minor shifts in levels. Actually, for the volatility trigger, the shift lower was minor from 431 to 430. However, the call wall shifted pretty significantly lower from 450 to 432. So in the last 3 days, the SPY call wall has shifted from 460, that was on Friday, to 450 yesterday, to 432 today. All right, so pretty significant move lower for the SPY call wall. And that level, not 432 is closer to being in play, but the put wall is more important. And again, the S&P 500 trading below that SPY 425 put wall. All right, so again, those are the levels in play for today. So I talked about shifts in levels and also the levels in play. Let's take a look at NASDAQ now. So this is the NQ futures and Bookmap. And before I take a closer look at this chart, I want to isolate, first of all, QQQ levels that are in play for today. So here's QQQ in a 1-day, 1-minute chart. Note that 360 is the absolute gamma strike and also the volatility trigger. So QQQ trading below that level. Above that, the 361 level did act as support, resistance a few minutes after the open, and then this 355 or level, combo level just above 355 did act more or less as support, and now the QQQ trading below that level. All right, so those are the levels in play for QQQ. Let's take a look at NDX. And there's that same combo level. Acted as support, and now NDX trading below that level. All right, let's go back to NQ. So again, I have my own cloud notes showing QQQ levels. There's the 360 level, the 361 that acted as resistance. There's that combo level, NDX, QQQ, combined, gamma weighted open interest at that level. So this morning, this 361 as well as the lower daily expected move for NASDAQ did act as resistance. And there was a great divergent setup this morning. We'll go over that in a few minutes. All right, so I guess support really for both the S&P 500 and NASDAQ yet to be determined for today. All right, shifts in levels. There were no shifts in levels for NDX or QQQ today. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. And this will give us a sense of how market makers may be expected to react to changes in price and applied volatility. So this is gamma notional. I look at SPX, SPY, and QQQ. Note all these numbers are negative. Still quite negative for SPY, minus 2.146 billion. These numbers did shift higher than yesterday, so less negative, but still quite negative. So this means that traders are long puts, market makers are short puts. This is typical in negative gamma environment, and market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility, leading to wider trading ranges and larger moves. A less stable market than a positive gamma market. All right, let's take a look at a graphical representation of what that means. I'm going to take a look at the Vanna model. This is for SPX. What this chart is showing is market makers delta notional on the vertical axis and price for SPX on the horizontal axis. There are two curves on this chart. The first, the light gray curve, shows how market makers delta notional changes with changes in price only. And what this is showing is as price decreases, market makers delta notional will increase. They always want to remain delta neutral, so they have to sell futures to hedge their delta exposure. And then the purple curve adds implied volatility to the equation. So that's showing as price decreases and implied volatility increases, market makers have to sell futures to hedge their delta exposure. So when traders trade options in SPX and SPY, market makers hedge those trades. They take the opposite side and they hedge those trades with ES futures. And again, they want to remain delta neutral, so if traders are buying puts, for example, market makers are selling puts, that's a positive delta position, and they have to sell futures to hedge that those trades, to hedge their delta exposure. And that does work the other way around. If price increases, implied volatility drops, those puts start to lose value, and market makers can buy back their short hedges. All right, let's take a look and see where SPX is trading right now. So I've got SPX right around 42.26. So that's pretty far down this curve. There's 42.25. That's pretty close. So what this is showing is as price has decreased today, let's take a look at implied volatility. So let's take a look at VIX. So we know that price has decreased. Go back and check the chart. Yep, price has decreased for SPX. Let's take a look at VIX. Implied volatility is increasing, has increased today. Looking at VIX as a proxy for implied volatility. So this means that market makers have had to sell futures to hedge their delta exposure. So this is the effect of being in a negative gamma environment, tending to enhance or increase volatility when market makers are trading in the direction of price. Let's take a look at SPY. It's a very similar curve. By the way, this curve with a steep skew to the left is very typical of a very negative gamma environment. SPY trading right around 421 today. So that's right around here. Also in this very steep portion of the curve, 421, indicating if price continues to drop, implied volatility intends to increase, market makers will have to continue to sell futures. And then finally, let's check on QQQ. Trading just above 354. So also on this very steep portion of the Vanna curve. Let's take a look at one other thing. I'm going to go back. I want to take a look at this gamma model. This is for SPX. So when I talk about the gamma curve, this is what I'm talking about, this curve right here. And the key levels are shown on this chart. So here's the put wall, for example. And the important thing to note here is this big kink in the gamma curve here, indicating that at this certain point, right around, let's say 4150, market makers are fully hedged, and they will not have to continue to sell futures as price drops. And in fact, they may be able to buy futures slightly, but will this steep Vanna effect that I just talked about will cease if price reaches down here and the gamma model remains like this. All right, so my thesis for the day, first of all, looking for higher volatility. There were not enough shifts in levels to make any determination about a directional bias, but really what is driving price is treasury yields. So let's take a look at, give me just a moment here. So notice the, there's this steady increase. This is the 10-year Treasury yield futures / 10Y. And this is what is spooking investors and traders, is this increase in yield. So based on this, as long as this continues to increase, this is going to really be a headwind for equities, for markets. All right, let's take a look at some setups now. I'm going to start with the S&P 500. And I'm going to start by looking at what options traders have been doing today. This is the hero signal, hedging impact real-time options. This is from Spotgamma, available to Spotgamma subscribers. What this chart is showing is, first of all, price with a white line for SPX, and the hero signal with a purple line for a combined signal of SPX, SPY, XSP, and ES futures. So this is taking options trades and market maker hedging activity for all those four symbols, combining it into one symbol and showing a signal, again showing how traders are buying or selling puts and calls and market makers are reacting. So just looking at the big picture here, you can see that traders were taking positive delta positions from the open, and for about a half an hour they were going in the direction of price. Then price reversed lower and options traders really were no longer in charge. This is for the S&P 500, not necessarily the case for other instruments that we will look today. And it looks like around just after 12 noon, options traders got on board with the move lower. Let's see what they were doing today. So they let's zoom in on this till about 12:30. So up until about 12:30. I don't know why I did that. Sorry about that. Let's zoom in. Hope we don't. All right, so traders from the cash open, that's shown right here, cash open 9:30 a.m. Eastern Time. Traders were pretty aggressively buying calls. This is a pretty high number, 4.7 billion. That's notional value. Pretty high number. Traders aggressively buying calls, not doing much with puts. The blue line is essentially flat. Notional value minus 250 million versus 4.7 billion for call buyers versus put buyers. All right, so that's the S&P 500. So we know that options traders for the S&P 500 were not really driving price today. And then maybe at least in the morning, it looks like they are got on board now right around maybe somewhere between 12 and 12:30. So they started buying puts more aggressively, and they stopped buying calls and started selling a few calls. But so far, net for the day, the total signal is still positive. That's based on the activity in the morning. All right, let's go take a look at Bookmap. Take a look at the S&P 500. So in this case, we are really relying on order flow to determine who's driving the market today. So here's that first move up after the cash open up to just above this 426 level, as well as the 4276, SPX 4276, and then this must have been the number that Truman was talking about right at 10 a.m. Sharp drop, aggressive sellers. That's shown by the magenta volume dots. Let me tone down the heat map so we can see that a little bit more easier. So the volume dots are showing buy minus sell market orders. So it's a delta. A green dot indicates there are more buyers than sellers. A magenta dot indicates more sellers than buyers. And note the aggressive sellers come in at that level right at 10 a.m. and take price lower down to this 42.25 level. So about a 50-point drop from 42.76 to 42.25. Those are SPX numbers. And note that large traders were selling the move lower with iceberg orders. That's shown by this light blue line in the subchart. Also sell stop orders were helping to fuel the move lower. That's shown by the falling yellow line, And then also cumulative volume delta is moving lower as well as price reverses from that level. So it's aggressive sellers, large traders with iceberg orders, and sell stop orders fueling the move lower. All right, so that's the S&P 500. Let's take a look at NASDAQ now. So just like the S&P 500, the first 30 minutes were pretty bullish. A lot of aggressive buyers there, moving price up to the 361 level, as well as the NQ lower daily expected move shown over here. Then aggressive sellers come in, shown by the very clear shift from green volume dots to magenta volume dots. Let's see what options traders were doing. Go back to Hero. And I'm going to go to, this is a combined signal for NDX and QQQ. QQQ is driving the most of the action here, but we can look at this combined signal for completeness. Going to zoom in on the morning a bit, and here's a great divergent short. Pretty similar to yesterday, is options traders start moving first. They start taking negative delta positions. So initially up until about 9:55, they were taking positive delta positions. The Hero signal shifts lower. They stop taking positive delta positions, start taking negative delta positions, and then price reverses lower maybe 5 minutes, 5 to 10 minutes later. Right at the level that we just looked at, the QQQ 361 and the NQ lower daily expected move. All right, let's go back to Bookmap. So we know that just as price was approaching that level, options traders started taking negative delta positions. Looking at any QQQ round number level or any of these levels as persistent potential supported resistance. So we know that again that traders are taking negative delta positions, order flow shifts, buyers are exhausted, sellers come in. Also note the falling light blue line, large traders selling with iceberg orders. And then finally, sell stop orders help to fuel the move lower. Down from 361 QQQ 361 so far to just above QQQ 354. So much better setup, much cleaner, easier to read setup in NASDAQ than the S&P 500 today. And aggressive sellers, large traders with iceberg orders, as well as sell stop orders and options traders, all helping to fuel the move lower in NASDAQ. All right, let's take a look at some stocks now. I'm going to start with NVIDIA. And by the way, the theme for the day was reversals at key levels. Start with NVIDIA. Let's take a look at what options traders are doing. And note 450 is the call wall. And we'll talk about the reversal at that level. First of all, let's go take a look and see what options traders were doing in NVIDIA. And note I have ranked my watch list by weakest to strongest again. And just if someone didn't see that yesterday, This is the hero signal, and kind of a meter indicating or an indicator indicating the strength of the hero signal, comparing it to the last 30 days. That's shown by the extent of the slider. It's pretty difficult to see in dark mode here, but there's the left edge, the right edge, and the dot, the location of the dot within that range is showing the strength, first of all, compared to the last 30 days. So this is showing for NVIDIA, the current signal is the weakest that it has been in the last 30 days. It's shown by the dot. Then the colored portion is comparing the current hero signal to the last 5 days. So for NVIDIA, the hero signal is weaker, as weak as it has been in the last 30 days, and weaker than it has been in the last 5 days. All right, so let's take a look at NVIDIA first. Zoom in on this chart. Note here's the 450 level. That is the call wall and the key gamma strike that did its job today, acted as resistance. I'll zoom in on this just a little bit in the morning. So NVIDIA makes a double top there, and looking closely you can see that options traders start taking negative delta positions just, maybe a minute or two at most, as price follows. We'll see what traders are doing. Separate out puts and calls. So initially the call sellers were more aggressive. Let's just zoom in on that. Call sellers more aggressive. Yes. Not sure what causes that. Sorry about that. All right, call sellers more aggressive. Then maybe 5 minutes later, put buyers come in. So market makers taking the opposite side of these trades. So they are buying calls and selling puts. Those are both positive delta, so they have to sell stock to hedge their delta exposure. That's the most efficient way for them to hedge. So when traders take negative delta positions, market makers take the opposite side of those trades and have to sell futures to hedge, sell stock to hedge their delta exposure. All right, let's put back the total signal. Go take a look at Bookmap. Again, remember 450 is the call wall, key gamma strike. Price makes a double top, actually goes just above that level. But on this second test, let me zoom in on this. Zoom down just a bit. Oops. So on the second test here, it looks like more aggressive sellers come in. So there would have been a good entry right around 10 a.m. at the 450 call wall key gamma strike. Order flow definitely shifts bearish as options traders were taking negative delta positions, and market makers have to sell stock to hedge their delta exposure. All right, so that's NVIDIA. Great short setup at a level that you anticipate that should act as resistance, the 450 call wall. And it did its job, and now NVIDIA trading down below 435. All right, the next one I want to take a look at is Tesla. All right, Tesla 250 is the key gamma strike. So again, remember the theme of the day was is reversals at key levels. So there's the 250 level. That was definitely the high of the day. Let's go take a look and see what options traders are doing in Tesla. So there's the 250 key gamma strike. And as price approaches that level, let's zoom in. So as price approaches that level, market traders start taking negative delta positions. So they're buying, taking positive delta positions on the way up. Price approaches that level, the key gamma strike. The options trades consolidate, and then price moves lower. So again, another reversal at a key gamma level. All right, let's take a look at Microsoft now. So again, keeping up with the theme of reversals at key levels. There's the 320 key gamma strike for Microsoft, and price did overshoot that level a little bit, but eventually as price started moving lower, options traders started taking negative delta positions, moving Microsoft much lower. So let's go take a look at Bookmap. Hey, give me just a moment. I need to I need to do something here. Okay, I'm back. Sorry about that. All right, Microsoft. Oh, Tesla. I'm sorry, Tesla. Taking a look at Tesla now. Let's go back to Hero. Oh, did I? Sorry, I got a lot going on. Let's go back to Microsoft. Microsoft 320 key gamma strike. Back to Microsoft. So Microsoft overshot that level a little bit. A lot of aggressive buyers right at the open. This big volume dot. A lot of aggressive buyers, the opening print. And then price moves lower, reversing at one round number level above the 320 level, but there's the 320 level. Price moves lower right around 10 a.m. with everything else. And Microsoft still continues lower. Let's take a look at Hero. Let's zoom in on this. So really up until about 10 a.m. looking at this chart, price was essentially flat, moving up and down around the 320 level, and then just after 10 a.m. price dropped as traders were taking negative delta positions. Let's see what they were doing. So from the open, not really doing much with puts, maybe buying a few puts. That shifts sharply lower, and they start selling calls as well. So buying puts and selling calls. All right, now let's take a look at Tesla. There's the 250 key gamma strike. And price reversed lower just below that level as options traders started taking negative delta positions around the same time as everything else. Looks like Tesla is trying to recover back up to that level. Can't make it above the 250 key gamma strike. Very strong correlation between options trades, market maker hedging activity, and Tesla. Let's go to Bookmap. All right, so Tesla still couldn't make it up to the 250 level before reversing lower. Did find some support at the 245 level and now heading back down toward that level. As traders started taking negative delta positions again. Right around 1220, just below that 250 level. All right, I've got one other. Let's take a look at Amazon. And notice I'm still at the top portion of this list with the weak hero signals. So Amazon was actually the second one on the list. Zoom in. Here's the 128 hedge wall. And then options traders started more aggressively taking negative delta positions just before 10 a.m. Let's go take a look at Bookmap. So on Amazon, here's the 128 hedge wall. And price reverses lower. Already starting to move down before the 10 a.m. Move down everything else with everything else. Does a test of VWAP. That's shown by the light blue line. Whoops. VWAP light blue line. And price moves lower, sharply lower, as traders were taking negative delta positions, options positions, and aggressive sellers came in. let's just darken up these, make these volume dots a little bit bigger. It'll be easier to see. So here's the reversal at VWAP. Aggressive buyers shown by the green volume dots up to VWAP. Then aggressive sellers start to come in. Price moves lower down to the liquidity. This is showing a history of the orders in the order book. These orders below are limit buy orders, below price, limit buy orders. The darker the red, the darker the band, that more indicates more orders. Looks like they did pull some. Let's just zoom in on that. So it looks like the orders at 125 were pulled. They were acting as a magnet for price. Traders pulled those orders, decided they did not want to buy after all. Then it looks like they came back in right around 130 at 125, 125.90. Looks like those orders were filled. And they've also added orders below, now down to 125.50, 124.50. All right, so that's Amazon. So all the stocks that I've talked about, weak hero signal, reversal near the open at key gamma levels. All right, let's take a look. Let's go back to hero now. And let's see if we can, first of all, let's check on the S&P 500. So after reversing right around 1210, options traders continue to take negative delta positions in the S&P 500. Looks like SPX making a new low for the day, heading toward the 4,200 put wall. That's the next likely target if price continues lower. Let's take a look at NASDAQ. So now traders in NASDAQ starting to take positive delta positions. And let's see what, see if there are any levels in play where they're taking positive delta positions. So let's go to Bookmap, take a look at NASDAQ. So not really. Maybe around the 354 level. That is not a that's not a Spotgamma level, but around number 11 QQQ. So options traders starting to take positive delta positions. And some aggressive buyers are coming in, shown by the green volume dots. Certainly not significant. Let's take a look at QQQ. All right, so some aggressive buyers coming in to QQQ as well. Right around that 354 level. Let's go back to hero. And let's just do a quick scan of some stocks here. So Apple overall, like everything else, negative notional value on hero. AMD as well continues to move lower. Amazon. Looks like in Google now, some options traders are starting to take positive delta positions, shown by the uptick in the hero line there. So some buyers coming in, starting to sell puts. That's shown by the rising blue line, also positive notional value there. Still smaller than the call number, but it is has shifted positive. Let's go take a look at Bookmap. Go to Google. So some put sellers coming in, taking advantage of the drop in price, higher implied volatility, selling puts. Makes sense. Good options traders being contrarians. All right, let's go back to Hero. Take a look at the total signal. Go to Meta. Looks like overall the hero signal has shifted. Shifted slightly higher, still negative notional value for the day. And that would start at around 11:15. Note the hero signal at that time. Often a reversion to the mean type signal. Let's take a closer look and see what traders are doing. So right around 11:15, they started buying calls and selling puts, shown by the rising orange line, rising blue line. Let's take a look at Bookmap. Go to Meta. All right, so Meta definitely found support at the 300 level. And options traders started taking positive delta positions right around 11:15 at this 300 level. Let's go to Hero. And for Meta, 300 is the key gamma strike. All right, so Meta finding support at the 300 gamma strike as traders start to sell puts and buy calls at that level. Let's take a look, see Microsoft, see if there's any change. No, traders, the only thing you can say for this is the options traders have kind of taken their foot off the gas. Netflix, still overall negative for the day. Nvidia, looks like traders have taken their foot off the gas, options traders. Finally for Tesla, looks like they may be starting to take positive delta positions. Maybe this may be a little bit of a divergence here setting up in Tesla. Zoom in on this. So potential divergence set up in Tesla. As traders are taking positive delta positions. Let's go take a look at Bookmap. All right, so if you're looking for a potential long in Tesla, I would definitely look for wait for a trend break and a higher low. So look for, and potentially for Tesla to trade above VWAP, or definitely some aggressive buyers coming in as well as a trend break. All right, let's go back to the S&P 500 and NASDAQ, and then we'll wrap it up. All right, so the S&P 500 may be finding support around the 420 level, SPY 420 level. It's still above the S&P 500, the SPX 4200 put wall. Note the buyers at this level. First of all, in the order book, this dark red band showing a large number of limit buy orders right around the SPY 420 level. That's also ES 4250. Some large traders coming in with iceberg orders. That's 1,346 executed, 12 different transactions consolidated into one number there. There's 400 contracts executed. Those are buy orders. All right, so maybe indices may be trying to find a bottom today. All right, that's all I have. My time is up. I want to thank everyone for watching. Thank you for your questions and comments, and I will see you tomorrow. Thanks again. Bye.